Good afternoon, everyone. It's Alissa Coram and Justin Nielsen here with a look at the stock market today, right at the closing bell. Let's go ahead and check in with the major indexes. We've got a pretty packed show today. We're going to be talking about the Zendesk trade and two chip stocks, maybe two different tales here with the chip stocks.
Yeah. Which is better? Which one would you do?
Exactly. So it'll be fun. But let's take a look at the major indexes. We did close modestly lower today. The NASDAQ leading on the downside, down about 0.4%. The S&P 500 closed down about 0.2%, and the Dow down about 0.1%. So a down day, but not bad.
Yeah, I mean, look, we've been up so far up off the lows. This is just a little blip in terms of that. So sometimes, if you're looking at the minute and really trying to focus in, it can seem bad, but really when you put it in that big perspective,
right?
This is normal.
Exactly.
And as you talked about, I mean, you talked about it with Ken, you talked about it with Chris yesterday. We're hitting up against that area of 200-day moving average line, as well as 7,500 for the NASDAQ. And so this is expected. This is normal. There's nothing to worry about it.
Exactly. Well, it's worth repeating. And we have the chart of the NASDAQ here. You can see visually what Justin is explaining. Coming close to that 200-day line for the NASDAQ, but as anticipated, we've come so far off the lows, and having a little breather here would be expected at this point.
I mean, we were up almost 10% in January. I mean, that's
wow.
a good year sometimes.
Yeah,
I mean,
exactly.
We just did that in a month, and you can see that the 200-day moving average line. If you kind of go back a little bit further from today, you can see that it was also resistance back in November, December, and that was an area of support actually. If you kind of go back further and look at 2018, January of 2018 hit resistance at that 7,500 level. It hit resistance there at March. It broke up above there in June, got support there. So whenever you see a level that keeps on getting tested, that's important.
Yeah,
something to be aware of.
I was about to say the exact same thing.
Yeah, and sometimes it's whether it's psychological or a self-fulfilling prophecy that all the technicians are kind of looking at that, it doesn't matter. You just know that those multiple tests are important.
Yeah, it's important, and it's happening, so we will continue to track that. And we want to go over the Zendesk trade today. Ken and I mentioning earlier today, this breakout here, stock in the enterprise software space, and we actually saw Zendesk, although it did close up more than 5%, well off of that intraday high. So as far as handling this trade, let's walk through it step by step, how we would have analyzed this throughout the day.
Right. And so, starting with the Zendesk, if we just look at the daily chart, and if we can go ahead and pull that up, you can see that it broke out above a little resistance area. But that happened at the end of January. When you've got earnings coming up in 5 days, I'm not very comfortable doing that, because unless you have a cushion, it's very tough to get into something and then have earnings right around the corner. Now, if you were saying, okay, I'm going to wait until earnings, I'm going to try it out then, well, now you're looking at today, and it's up a lot, but how did it do it? If you start looking at the intraday chart, and you look at the 5-minute chart, so if we could pull that up, and this kind of speaks to the point
exactly what Chris and I were talking about yesterday.
So let's just turn that lesson into something you could have actually used today.
Yes.
And with Zendesk, you can see that it had a 5-minute bar that did not look great. It started up high and it closed in the bottom of its range, and then it never traded at that range again for the rest of the day. So if you were using the 5-minute bar like Chris suggested yesterday, or if you were using the first hour high, either way, this wasn't a stock you would have been purchasing today.
So basically the goal is to look at it, prove its strength.
Exactly. Now, that doesn't mean Zendesk is out.
Sure,
if it improves, hey, keep this on your radar. The computer software enterprises, we've been saying over and over, is one of the strongest groups out there, and Zendesk has a lot of things going for it. But as far as today, this is one that we would pass on.
All right, well, we'll keep it on our radar for sure, but we want to pivot over to Max Linear. It broke out today, a nice gain, up over 11%. We have heavy volume, relative strength line at its highest level in quite a while here, but this is more of a bottoming base situation.
Bottoming base, sure. And that's valid. It's totally fine for you to go off of a bottoming base. But one of the things I would recommend, and let's go ahead and pull up the Max Linear chart here real quick. You can see that it's just got back above its 200-day moving average line. So it is getting, it's improving. But you know, is this the best stock out there? Is this what you want to be putting your money in? So
right, because on the face of it, it looks like a pretty nice move, closed more than halfway above the intraday range for the day, nice volume there.
And if you're looking at the best performing stocks of the day, Max Linear is up there, you know, and not only that, but it was one of the best groups of the day. The chips were, you know, by far, you know, you look at the Philadelphia Semiconductor Index, and that was really showing a lot of strength.
But peeling back the layers even further, where does this stock lie within the group is also something that's very telling, because not only do you want to be looking at the top groups, but the top stocks in that group.
Exactly. You don't want just the leader for today. You want what's been leading this entire time. So that's where if you pulled up a stock checkup, and this, you just go to investors.com, you go to the research tab, and you can pull up a stock checkup.
That's right, and we have that for everyone.
Yeah,
Oh, there it is.
There it is. And so you get this doctor, and look, the doctor's got a little frowny face, okay? He's not happy. This is not a good diagnosis.
Bad score, 67.
Yeah, it's a bad score, and you can see where it falls. Max Linear is 17th. So now, what I'm going to do is I'm going to start looking at some of the other stocks that the stock doctor says is a little bit better. What the checkup says is a little bit higher.
And that checkup is based off of the composite rating, which is looking at fundamentals and technicals. So we see the technical strength here for Max Linear, but not the best fundamentals.
Not the best fundamentals, and there's even better technical strength out there too. You know, this has a 39 relative strength rating, so why not go with something that's a little bit stronger?
Like Xilinx.
So Xilinx shows up on the stock checkup, and this is one that we actually put on leaderboard. We put this on leaderboard on its earnings report.
Yes,
and
a nice gap up that day. And
immediately had a lot of profit on it, you know, that day, and it's just continued to move up from there. It paused a little bit, and it was up only 3% today. So you might say, oh, well, Max Linear up 11%, Xilinx up 3%, you know, but Xilinx has better numbers. It has, you know, and the fundamental side, it's got double-digit growth in earnings and sales. You know, there's just a lot of things that are better about Xilinx.
Right.
So,
and on the day of the breakup for Xilinx, not necessarily a crystal ball, but seeing how strongly it was able to close, and now you see where it's gone from there, maybe a little bit of a tell for what's to come.
Absolutely. This goes back to what Chris was saying about those arrows, when you see the up arrows. Okay, this is very different from how Zendesk looked today. This is what you want your stocks to look like. They close at the top of their range. That's bullish. When it starts closing in the lower part of its range, that's bearish.
All right, well, a good looking move for Xilinx today, no doubt. Thank you so much for your analysis and all your insights today. And make sure you head to investors.com for even more stock analysis and all the latest investing news. And you can also check out our content across social media, from YouTube to Facebook to Instagram and Twitter. So follow and subscribe for all the latest from our team. And make sure you are sending in your Q&A questions. Ed Carson and I, coming up on our afternoon show on Friday, will be doing another little mini Q&A session. So start pouring in those questions, and we'll be happy to take a look at those on Friday. So until next time, this has been Alissa Coram and Justin Nielsen, and we'll see you back here tomorrow morning for our market update. Stuff. Thanks, Justin.
Thank you. You always make it so easy.